Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders and our website is www.stochastic-magd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. Do not use this tutorial as trading signals. Very, very important. Let's get started, all right? In this video, we're going to analyze, the US dollar and the Japanese yen. US dollar, Japanese yen, currency pair. This is the first video about the dollar yen in 2015, the key levels that we need to pay attention to: the short-term equilibrium price level, the current short-term equilibrium price level, and also the current long-term equilibrium price levels. All right, it's very, very important for traders to know. Professional trade around key levels. Ordinary traders use technical, indicators to enter the trade. But if hedge funds, big institution, financial institution, are coming to the market, they will enter the market at the key levels for different reasons, all right? So these allow market participants to navigate through this messy market. So you are driving, you want to know where are the roundabout, where are the junction, where are the traffic light, and also maybe to know where are the hidden, speed cameras, so you can drive safely from A to B. The same thing we do when we are trading. We want to know where are the key levels, what the professional looking at, all right? What is likely to happen around those key levels, all right? So if you are day trading, swing trading, you want to know where are the key levels, all right? And also to see the bigger picture. The purpose of the video is to show traders, the bigger picture. I'm talking about FS trading, a dollar-yen currency pair, all right? Very, very important. The thing that you need to pay attention to throughout this 2015, the key level that you don't want to forget, you want to remember and pay attention to as the price going from A to B. Very, very important. So I recommend to traders to note down those key levels. I have a notebook, for the euro dollar, and I have, I can tell you now, I know, the short-term equilibrium price level, the current short-term equilibrium price level for the dollar. I know it. I know the current long-term equilibrium price euro for the euro dollar is at 12396. All right. You don't want to forget those key levels. The same thing we're going to do now for the dollar-yen currency pair, and also we want to highlight some key levels. For the euro, we talked about last week. We were talking about key support level 1 at 107, 10790, and also support level 2 at 9401. Short-term equilibrium price level at 11654, and long-term equilibrium price level at 12396. All right, I have a notebook here, which I have it now. That's where I'm reading from. So I recommend to traders to do exactly, the same thing, all right, to pay attention to, those key levels, all right, if you want to trade, a financial instrument, Euro this week, you see that it was in the range, on a 15-minute chart, the range between a 11444, all right, 11444 and a 11287. Did you see it? All right. So if you are trading, you don't want to violate the market pattern. This week for the euro, did you see it? The market pattern was what? Not a rising channel, but an horizontal market pattern because of the situation in Greece. The price was oscillating between the level of 11444 and a 112, 87. All right. So for the dollar yen, next week again, check the market patterns. Market pattern, rising channel, declining channel, horizontal channel. Very, very important. This will allow you to make excellent decisions. And also, even if it happens to be a losing trend, you won't feel too bad about it because you know that at least I did not violate the market pattern. The next thing I want to say to traders, whenever you are trading, apart from the market patterns, all right? So maybe you are applying the market pattern. The next thing you want to incorporate in your trading strategy is the trading drill, all right? the setup, the signal, and the low risk entry point. For TSCW34 traders, look for a beautiful setup either on the third best time frame or second best time frame, and then switch to the first best time frame. Or you can even go to the higher time frame, weekly chart, monthly chart, find a beautiful setup, all right, and then switch to the first best time frame on the edge. Very, very important. Steadily, all right. Sometimes traders will start improving, but they will give up quickly. They'll say, oh, it's not working, but keep improving, all right. Let's go back to the main subject. We are talking about FS trading, US dollar, Japanese yen, 2015. Which are the level we need to watch? The first key level that we must watch for the next 2 weeks is the orange line here at 11863. This is the short term, the current short term equilibrium price level. This level will remain in place for the next 2 weeks. So you don't want to forget it, all right? So it's not beautiful short-term equilibrium price level, I have to say, but we need to, all right, pay attention to it. It's not gorgeous, okay? The next key levels that I want you to note down in your notebook, dollar yen, as I have here, euro dollar, to exactly dollar yen 2015. The next key level that you don't want to forget, all right, is at 11174, 11174. 11174. That's the pink horizontal line here. That level is beautiful because it's also, okay, a cycle point, okay? That pink line, which is corresponding to the long-term equilibrium price level for the current long-term equilibrium price level for the dollar yen, is also at a cycle point. I'll come back to it very shortly. So note it down, okay? There are two key resistance levels because the dollar yen is going up now. So the first, what I like to call resistance level 1, that I want trader to remember is at 12860. Resistance number 1 at 12860. So if you find a support and continue to go up, do not forget 12860. Resistance level 2 is at 11493. That's the second red line here, 11493. I will explain to you how I get to this number very shortly. I don't have to hide it, okay? Because you are my friend. So you see that, you see here, the price start going down. Where my cursor is, you see the green spot here. Price went down all the way here, all right? Display the lowest low, and then return back to the starting point. This pink line here is the long-term equilibrium, the current long-term equilibrium price level. It's also a cycle point because the price did 180-degree turn, starting going down first and then returning to the starting point. That's a cycle point. Traders who understand the alien wave, all right, will know that very often, okay, we see that a new trend may start from a cycle point or the previous trend may fail around a cycle point. We need to be aware of it, okay? So how I come to the resistance level 1 and resistance level 2, I'll use, okay, the width, okay, the depth, okay, how deep is this round bottom, talking about cycle point, went round, isn't it? All right, round, okay, so the depth is this distance here, this vertical line here. I project it to the top like this, giving me, okay, the key level. I also divide that depth into 2. See, the depth is all the way this vertical line. I divide it into 2, getting me this, okay, short at the half of the depth. Are you with me, all right? If you don't understand it, okay, put a comment below. That's half of the depth of this round button is this one. So by projecting half of that depth, I have resistance level 1 from the point of the cycle point. All right, so I project it from the cycle point. Give me resistance level 1. By projecting the whole depth of the round bottom, forming the cycle point, okay, I have resistance level 2, all right, channel projection, horizontal channel projection, okay? That's how I come to 12860 as the resistance level 1, and also resistance level 2 at 11493. Have a notebook for the dollar yen if you trade dollar yen, and do not forget those key levels throughout this 2015, all right? Navigation, okay, you want to know where are the resistance level, the key level that the hedge funds, I tell you now, the hedge funds are watching those key levels, and reaction are made around. You see how the price oscillate around the short-term equilibrium price here? It's not by mistake, all right? It's not by mistake. You want to know also, yeah, you see how it's stuck here? So equilibrium price level is acknowledging the equilibrium price level, all right? By the way, the short-term equilibrium price level and the long-term equilibrium price level my own proprietary trading tool. It's not part of the TST trading system. Not at all. My own private, okay, trading tool, okay? I'm sharing with you here, but I will not reveal to traders the formula that I use to calculate the short-term and the long-term equilibrium price level, okay? So we talk about, all right, the short-term equilibrium price level at 11863. This level will remain in place for 2 weeks. So if you are day trading, swing trading, you want to pay attention to the level of 11863. It's with a level that is urgent, okay? The short-term equilibrium price is urgent. You need to pay attention to it. The price may deviate. What usually happens, the price may oscillate, deviate from it, and then go back to it, 1, 2, 3. All right, you want to know where is the short-term equilibrium price level, all right? All right, so here you can see it's oscillating around it, okay? Very important, all right? The long-term equilibrium price level is at 11174. Note it down. Resistance level 1, 12860. Resistance level 2, 11493, okay? So you note it down now, okay? There are other key levels that I want you to remember also, okay, which I'm going to share with you here, all right? Support level 1, all right? Let's see my notebook. I have a notebook for the, all right, the dollar yen. I need to note it down myself right now. Support level 1 is at, okay, 94951. Okay, note it down, okay? I'm doing exactly the same thing here, 94, all right, 951. Support level 2, note it down, don't forget it, okay? Just note it down. It's nothing special about it, but you want to know where they are. There's no magic one. They are not magic one. They are not, all right? That's the special, but they are key level that you don't want to forget. That's it, very simple. All right. If you see sometimes a gorgeous, beautiful signal around support level 1, yes, gorgeous. Okay. Support level 2 at 8674. All right, 86745. Support level 3. All right. So we have support level 3 is the lower part of the range of. It's the lower part of the round button. See this round button? I just draw it here. You see here, I didn't go to the lowest point. I choose this level here. Support level 3 at a 7777. Okay. Support level 3, 77793. Beautiful number. Okay. 77793. Easy to remember. All right. So these are the key levels that we want to pay attention to if you are trading the dollar yen. Okay. The next thing that professional are using is what? Pitchfork tool. All right. Subscribe to Day Pro Traders YouTube channel. Go and watch the video about Pitchfork tool. Go to www.dayprotrader.com. Click on Pitchfork tool. If you are day trading, swing trading, please, my dear, use the Pitchfork tool on any time frame. 30 minutes, 50 minutes, 5 minutes, 15 minutes. Okay. Hourly chart, 2 hour chart, 4 hour chart, daily chart. Use the Pitchfork tool. Weekly chart, monthly chart. Use the Pitchfork tool. All right. 3 points we need to select. Okay, in order to use the Pitchfork tool, you see the price went down from here all the way up here. So the first point that I'm selecting, okay, is the beginning of this impulsive move, a bullish strong move. The second point that I'm selecting is this point at the top. And the third point is this one here. Now I am ready to put my Pitchfork tool here, the lower part on my first point, and then this part, so the second point, and okay, the third part here. So you can see I put my Pitchfork tool on the chart. When the price, so as the price did, it start going up. Very important. That's why I don't want to talk about Pitchfork tool now. It's about dollar yen, so I'm not going to do well on it. So I'll send you to dayprotrader.com. Or, all right, subscribe to Day Pro Traders YouTube channel. Check the videos there, okay? So when the price start going up, you see here, come to the edge of here of this Pitchfork tool, also resistance level, trader reacted, okay? I'll come back to what has happened here, okay? So this Pitchfork tool is not very useful to me now because the price is far away from it. I can project it, all right? I can project it. You see half of the Pitchfork tool. This distance here, okay? Oops. See the distance, half of it. You can project it, okay? And draw the horizontal line like this. Are you with me? All right? I can keep doing that, same distance, half, all over, okay? But this is one way you can also pay attention. See, half, you see the same half, same half, same half, all right? You understand? Okay, let's move on because we don't want the video to be too long. Let's move on one more time. Okay, if you accept that, just draw them roughly, say, okay? And then one more time. Okay, we can draw another one. Half, 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 without cheating, all right? Something like that, if you accept it. All right? They look almost equal, yes or no. This looks a bit smaller. All right? Okay. If you have your child next to you, they will tell you, that's cheating daddy or something like that, all right? Just teaching mommy, whatever. So, okay, so you accept it now, okay? I think this one's a little bit bigger, okay? You can do that, okay? You draw your pitchfork tool, it's not useful for you. You can also project, okay, half all the way here. You see how they stop here, okay? You see how we touch it here on the edge, all right? Beautiful, isn't it? This one also on the edge of this one here, all right? Not bad place. So you can day trade, selecting the whole spot trading zone. You can come near this one here, all right? You can do it. Though it was just drawing this first pitchfork tool, I can draw this line and I'm watching. If the price come to the edge and I receive a beautiful signal, I will take it, okay? All right? You are watching here, it went horizontal, all right? It went horizontal and then went to hit it here. Not bad place, all right? And then it pulled back, try to retest this one, and then went all the way to this one here. This is how you want to trade, all right? Let me remove my drawing. I don't need them. You see now, just to show you what you can do with the pitchfork tool, okay, by projecting, okay, the half channel, okay? Let's move on. So I use this 3.1, 2, 3 for my pitchfork tool. I want to change it a little bit, okay, because I've done my homework. I don't want the video to be too long. Okay, let's put it here. So 1, 2, 3. I can also use this one. 1, okay, so 1, 2, 3, all right? I can draw my pitchfork tool like that, put it here. All right, it's not useful for me as such. That's why I want to use this one now, all right? 1, 2, 3, good, all right? So you can see that we are very close to our new pitchfork tool here, all right? We are very close to it. I'm going to do things a bit accurate, like Lavoisier, all right? Lavoisier, all right? It's a man obsessed with accuracy, okay? Want it to be exact, George, all right? Make sure it's exact, George, okay? So I'm projecting the first half channel as we did before, but for this new pitchfork tool, we are trying to be more accurate this time. You can do this. I'm on the weekly chart, by the way, so you are wondering which time frame. It's a weekly chart, dollar yen. Though we are using currency pair here, traded that are trading stock, commodity, futures, option, you can apply the same strategy, okay, if you are day trading, swing trading, okay, to identify, okay, the hot spot trading zones where, okay, smart money, okay, are making decisions. So this is it. So I have my, I projected my pitchfork tool, the half of it, so to detect the hot spot trading zone. I can leave it on my chart like this and see what will happen, all right? It's my chart. I can leave it here, okay, to see, okay, if the price here went a little bit closer to this half, okay, people sell it. So that's where we are now. What's happening, my friend? What's happening with the dollar yen? I consider the dollar yen as the most distorted, okay, financial instrument right now in the market, okay? Feel free to disagree with me or to punch your computer or to punch the table, all right? Something like that, okay? It's a very distorted financial instrument. No, it's not distorted by the market participant. It's distorted by the Federal Reserve or the central banks around the world. But It's normal. What's happening? Okay, what's happening? All right. So in 2008, we have the financial crisis, and the Federal Reserve, U.S. Federal Reserve, start printing the dollar, quantitative easing, 1, 2, 3. All right, and then they have stopped printing the dollar yen. There is a concertation, all right, between different governments. So when the United States were busy printing the dollar, only the United Kingdom, Great Britain, was also printing the dollar. Other countries, the Eurozone, were not printing the dollar, but Japanese were not doing anything. The central bank in Japan was not doing anything. But suddenly, the U.S. government has stopped printing the dollar. They were telling the market, no, market is improving, we will see in the right time, we will put that interest rate at the right time. That's it all the time. Same message, okay? Then the Japanese decided to start printing, start their quantitative easing, which is a devaluation of the yen. As they have started, the Federal Reserve United States was saying, we are coming to the end of quantitative easing or money printing in the US. We are coming to the end of devaluing the dollar yen. As they start saying that, the Japanese say, well, guys, we are now starting to devaluing, the yen. So it looks to me that the United States said to the Japanese, hold on a second, guys. We know you want to devalue your yen, but hold on, we will start first, okay? We start first, and then you will start later. And then when you are doing yours, the Eurozone, may start, and so on, okay? So it looks to me, this is what's happening, okay? So the Federal Reserve has stopped printing the dollar, have stopped devaluing the dollar, and the Japanese at the same time have started devaluing the yen. At that point, the dollar yen start going up because we are comparing the US dollar to the Japanese yen. So when you see this session here, when the price was going down, this is the time, 2009, 2008, from 2009 all the way to 2012, the Federal Reserve was busy devaluing the dollar. So the dollar yen was going down. And then they stopped in 2012, start talking about, in fact, 2013, they start mentioning clearly to everybody, So say, now, blah, 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 we are coming to the end of the devaluation. And then the market responded and pushed it up. And the Japanese, start saying we're going to devalue the yen, and the dollar yen start going up, start going up big time, all right? Start going up, So you know what's happening now. The decisions that are made by the central bank are affecting the dollar yen. This is not a normal market movement. It's just Federal Reserve made the decision, markets responded. Same thing we see for the New Zealand dollar now. They want to devalue their New Zealand dollar. They don't want the New Zealand dollar to appreciate against the US dollar. And people are selling the New Zealand dollar against, the dollar yen. Here it is. Here it is. Here it is. This is the New Zealand dollar against the US dollar. This is about, central bank talking and market responding and doing exactly what they're expecting. All right, let's go back to the dollar yen. It's a in fact, the dollar yen is a market indicator. All right, it's a market indicator. All right, so when we are looking at the dollar yen, we can analyze what is likely to happen in the stock market. Go to dayprotrader.com, click on Market Watch. You understand a little bit what I meant by market indicators. All right, there are technical indicators, there are market indicators, There are market leaders also, and the dollar yen is a market indicator. Crude oil is a market indicator. Gold is a market indicator. And the dollar yen is distorted, proving to us that the current market environment that we are in is not very, very healthy. All right? So if the market is distorted, you need to be careful. All right? You need to be careful, right? Because I don't want to go too deeply about distortion here, but we want to go back to the dollar yen, all right? So putting on my chart, I'll finish to talk about the distortion now, all right? Because some market participants don't like this kind of discussion going on in the market, but we need to talk about it, We need to talk about it. So, but it's nothing wrong for central bank to make their decision, all right? That's their role. They made their decision, and market participants should just follow it and do exactly what they're expecting. That's what they are doing here, and the price is going up. I want to tell you something else about the dollar yen. So where we are now, we are above the cycle point, so we are above the cycle point, yes or no? All right, you see now? So In normal condition, if the price breaks above a cycle point, it's very, very bullish. So it breaks above, it's a very, very bullish. If the price dip below a cycle point in a downtrend, it's very, very bearish. So for the dollar yen, it looks very, very bullish because the market is still expecting the US Federal Reserve to start, okay, putting up interest rates. So far, they haven't done it. So the market cannot, they are forced to keep buying the dollar because the Federal Reserve said that we're going to put up interest rates. So they just keep buying it, and no one, the big institution will not, okay, sell the dollar yen at this point, even if they have a sell signal. So the priority now is for buy, 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 buy. Are you with me? All right? Are you with me? All right? I recorded a video that I posted at dayprotrader.com. I will recommend to traders to go and watch it. It's called Fibonacci Training. Fibonacci Training. And I was analyzing the dollar yen. Where we are now, the dollar is at the 161.8% Fibonacci extension zone. All right? It makes sense? That's where we are now. Okay, let's see. Okay? Because I don't want this video to be too long, I will recommend to traders to go to dayprotrader.com, all right, and to watch the video that we call, okay, Fibonacci Training, okay, all right, Fibonacci Training, all right, and then you will understand what I'm talking about here, all right. That's correct. That's where we are now, okay? So we are at a 161.8% Fibonacci extension level using the measurement from here. I'm on the weekly chart. So after this move, you see a pullback. The low, price went 1, 2, 3, continue to go up all the way up here, all right? That's what I'm doing here, okay? 161.8% Fibonacci extension zone, all right? So similar to this one also, okay, 161.8% Fibonacci extension zone, all right? Okay, so the price now 161.8% Fibonacci extension zone, which is a hidden support or in fact, it's a hidden resistance level corresponding to the zone of the short-term equilibrium price level, all right? So looking at the cycle point, the price breaks above it. In normal condition, the price will try, repeat, does not have to, will try to retest the cycle point. But you have to see that it's very difficult for the market participant to sell the dollar yen because of the Federal Reserve. The Federal Reserve can decide to put up interest rate anytime, so no one is trying, okay, to, okay, sell the dollar yen now. Everybody is buying the dollar yen. The big market players are buying the dollar yen. All right. So when you are selling the dollar yen, be very, very gentle. The only thing, ladies and gentlemen, that can change, okay, this situation right now, all right, the only thing that can change this situation now is the Japanese to put up interest rates. All right. If the Japanese government, the central bank start putting up interest rates before the Americans, that will change the dynamics of this market. Or if the Japanese also came out, the Bank of Japan came out and said that okay, now we are stopping our quantitative easing, that will put, okay, this currency pair under pressure. But as everything stands now, all right, the market wants to buy the dollar yen. There's another level here that I'm drawing these points. And this high and this high here. I'll color into red so you can see clearly on the chart. That's it. It's a trend line that we need to be aware of, okay? This trend line here, which is bringing out on the edge our projected channel here, on the edge here, all right? The price now at 161.8% is also above the cycle point, which is the short-term equilibrium, the long-term equilibrium price level, 11174, the long-term equilibrium price level. All right. So what do we need to do now? So from the weekly chart, we draw all our trend line. We know the levels that we need to pay attention to. All right. We can again draw another pitchfork tool if you want. See now, all we are doing now is just a technical analysis. But we don't want to forget the fundamental, as we have seen this week for the euro dollar. The situation in Greece, all right, the discussion about the bailout Greece. Finally, they come out with a decision. They have there is agreement, okay, 4 months, for 4 months, ladies and gentlemen, not even 6 months, all right. There is agreement for 4 months. After 4 months, we will start again another discussion about the euro dollar, talking about the Greece situation, all right. So the economy news and the fundamental can change, okay, the dynamics of the market, all right. So this is a technical analysis, especially if you are a new trader. Okay? Remember, we must combine the technical analysis and the fundamental. I have drawn another pitchfork tool. Now, training this point. 1, 2, 3. All right. Went up, pull back. Okay. So the price is on the edge of okay, the smaller pitchfork tool, sitting, if you accept that word, 11863. This is the short-term equilibrium price level. Priority to bullish signals above 11863, which is a short-term equilibrium price level. Now, some trader will say, okay, I'll go and buy above, okay, 11863. That's wrong, okay? That's completely wrong. Priority to bullish signal means that the price will be in a rising channel and pull back on the edge, and you are buying at a support level. You will also pay attention to the economy news. Priority to bearish signal below 11863. That's all for day trading and swing trading, that's all we can say to traders right now. Priority to bullish signal above 11863. Priority to bearish signal below 11863. This is the short-term equilibrium price level. If the price going up, using this current pitchfork tool, you need to be aware because you see some traders sold it on the edge here. These are sellers. You see the shadow. Please watch that video, Fibonacci training. Okay, at Day Pro Traders YouTube channel. I talked about this already, and I was analyzing the dollar yen. So this, in fact, what I will do, I'll try to remember to put the link below, so you can just click on it and watch it straight away. Okay, Fibonacci training. All right. So if you find a support, all right, above 11863, continue to go up. Remember the pitchfork tool that we have drawn now. This level here is will reveal to us hidden support and resistance level. I also share with traders. That video is excellent video, Fibonacci training, very, very important video. You see a trend line, you want to be aware of the horizontal resistance level, okay? There's one at 12061, yeah? This resistance here, and there's another one at 12164. These are horizontal resistance level. Price going up, the price looking for a better resistance level, all right? See them, okay? I don't want to draw them, so I'm just highlighting them. See here, okay? There's a resistance there, and there's also a resistance here. But do not forget the pitchfork tool. We are on the edge of it, and also edge of this one. Very often, all right? I need to say to traders, there are big institutions that watch my video. I need to tell you now. There are big institutions that watch our videos. There are a lot of big institutions that watch video on YouTube's, all right? Not only my video, a lot of videos. There are traders that work for big institutions that work videos, and you want to understand, if big institutions want to buy, they want the price to go down fast. If big institutions want to sell, they want the price to go up fast. That's why we say to traders, wait for London to open fast. Okay? Wait for London to open fast. Wait for New York to open fast. Wait for Hong Kong to open fast if you are day trading. All right? Very important. All right? So, this is where we are now, okay? I'm going to remove all my drawing. I want to focus, zoom into it a little bit more. All right, zoom into it a little bit more. All right, because I want you to understand what is happening, okay, in this messy market, so you don't step on the foot of the big market players. All right, this is what if you are a retail trader, you don't want to step on the foot of okay, a big market player. You don't want to do it. All right, let them go first and then follow them. That's the best attitude, okay? Also, on the weekly chart, my friends, we have what? A balanced market pattern around the short-term equilibrium price level, as I said to you. So, you see now? So, do not be surprised, the price may pull it back down. So, if I highlight that, okay, this is the lower part of the consolidation in the zone, not exact level, in the zone of 11706, 11706, all right? Start going down. Don't forget that the price consolidating and the lower end is at 11706. All right? Swing traders, don't forget that, okay? If you're going up, the top of the consolidation, roughly in a zone, I'm going to tell you again, in a zone, you can zone of 1 to 139, okay? 1 to 139. This is what's happening now on the weekly chart. We don't want to fight the market pattern. We are on the media line of our horizontal channel. So we can give priority to bullish signal above 11863 if we receive a bullish signal on the edge. All right, my friend. Now, the reason why I'm speaking like this is not to annoy traders, but to get the attention of traders. Okay? Because sometimes traders are watching videos and maybe they are doing something at the same time, all right? So if I change my voice or I raise my voice or I try to speak in a funny way, it's just to get the trader attention. So maybe you are drinking, okay, your favorite drink, or you are eating your favorite dish, you are watching a video at the same time. So I try to speak in a way to get your attention. See, why is he talking about, okay? So don't think that I'm doing it just to annoy you, okay? So, all right. So here we are. So we are now on the edge of the short-term equilibrium price level. In fact, this is not exact media line, but okay, just take it down. All right. So we want to play carefully. All right. If you find a support above the 11863, okay, great stuff, okay? This is what we see on the weekly chart. I'm going to go now to the daily chart, all right? Daily chart, what we have. The consolidation still stands clearly, but there is one thing I want to mention here. You see, there's a high, a lower high, a lower high. Let's join these 2 points here on the daily chart and see what we can come up with. So, you see now? So I bring another line now. Okay, let's color it into orange. No, orange, I have orange already, turquoise. See this, join this sheet on the daily chart. We have the balance market still in place, but there is this trend line here, okay, which is, okay, so that trend line, I'll just say, all right, 11903, call it 11900. Call it 11900, just above the short-term equilibrium price level. It will be better for traders, okay, to give priority to bullish signal, all right? So you want to be aware that there's a resistance at 11900. See this candle here. The resistance here is at 11900, all right? There's a resistance there. That's why the price stuck it there a bit. Okay, so there's a tiny, am I talking to myself? Let's zoom into it, my friend. This is on the daily chart. See, there's a resistance here. Okay, at 11900. See, this is also, you see here? Okay, if I put it there correctly. All right, 11900, you see? You want me to draw it? Okay, let's draw it. All right, let's draw it, my friend. It's our chart, isn't it? Roughly in the zone of 11900. That's it. Okay, it's showing 11902. But just think of 119. Okay, let's color it to pink to please, okay, ladies, all right? So, all right? Don't forget, there's a small resistance here. That's why the price did close, okay? So, all right? Don't forget that level, okay? Don't forget 119. I want it to show 119. It's a nice number. All right? Okay, so on a daily chart, my friends, ladies and gentlemen, we have seen now, okay? The balance market, this is very important. So the balance market, what's happening? Trader will try to sell on top of the consolidation and will try to buy on the lower end of the consolidation. Okay, that's what's happened. Some traders are very patient. They allow it to cross the media line before they will join the move to the upside. That's how some traders trade the consolidation. They don't like to buy here because sometimes they are taken out quickly, so they allow it to come to the media line, and then from there, if they find, you see here, it goes above, and then pull back, and they will take it from there, okay? Now, you see, it has stayed here for a long time. It's looking a little bit bearish for the dollar now, so you need to be very gentle, okay? Because we have now a triangle. If I color this one into turquoise, see now? So we have a triangle, okay? You see the turquoise line, and this line here. Okay, I don't want to color this one in orange because of the consolidation here. All right, if they are forcing it down, it will drop down big time. All right. Okay. I want to change the color of the pink one to a different color because the long-term equilibrium price level is the pink one here. So I will use a different color for, sorry, ladies. Okay. So what I will use now, traders say they can't see yellow on the chart. Okay, use turquoise again. That's the turquoise horizontal at 119. Okay. Okay. I'll change it again. I don't like that turquoise there now. That's my favorite color though. But oh, okay, put it in green. Okay. All right. So we have a triangle being formed here. The price display a high followed by a lower high. Okay. It's telling us that the bullish momentum is diminishing. Okay. Price went down but failed to display a new lower low. Well, so we are in a triangle. So both bulls and bears are winning. So though the bear pushed it down to display a lower high, the price couldn't display a new lower low, forcing it to create a triangle. Okay? Okay? But, so in that case, if you want to sell it, all right, my friend, okay, remember this trend line that we have drawn, this high and high, okay? You want to sell it below, a little bit below the short-term equilibrium price level, all right? To bring it down. If you are bearish, now, you're going to fight with the big market players because, all right, they are playing with this, the Federal Reserve. So you want to know what is happening in Japan, the economy news. You want to concentrate on economy news in Japan. Go to Forex Factory, know what is happening in Japan, the economy news that can affect okay, the yen, and also the economy news that will affect the dollar yen. All right? The market is a global market. Things that are happening in the Eurozone will affect the US. Okay? We are not living on one small island somewhere. It's a global economy. Though I'm talking about the dollar and the yen, that's the minimum we can look at. But don't forget that the market is a global market. That any messy situation somewhere will have a messy repercussion, okay, consequence somewhere else, all right? So this is what we are talking about. So right now on the daily chart, this is trend line. It's very, very important for us. Will it go above it and find a support and continue to move to the upside? So the price was displayed. The price displayed lower high, but failed to display a new lower low, telling us that the bearish momentum is not very, very strong. Denied. The bearish momentum has been denied here. Went back up, display a higher low. So in that case, we can draw another trend line like this. This is a beautiful bullish zone between the blue and the orange here. I need to highlight that for traders that are bullish. But remember the market pattern. If you are bullish in a horizontal channel. So it's not going to last too long until we go above the horizontal channel and we have, okay, a rising channel. Remember, we don't have a bullish trend in a horizontal channel. We can have a bullish move, but it's not a bullish trend unless the consolidation range is quite wide, okay? Bullish move, but, okay? So this is one thing I don't want you to forget. If you are day trader, swing trader, we are in a horizontal channel, okay? All right, the median line, I don't want to draw another median line. I prefer that you pay attention to this current short-term equilibrium price level for a dollar yen, all right? I don't want this at dollar yen, the short-term equilibrium price level, 11863 is the orange line here, all right? So we are in a horizontal channel, all right? Okay, but again, on the daily chart, don't forget this trend line, okay? And if you want to sell below the trend line and the, okay, short-term equilibrium price level. The target, if it's rational, the first support level will be the lower part of the consolidation. But if it breaks through this support level, the lower part of consolidation, don't forget, okay, how we come up with, you see the triangle here, come out, okay, all right? This is a conservative target for our triangle, okay? Conservative, very conservative. In fact, trader will say, John, what are you talking about? All right, it should be somewhere down here, all the way down. But conservative measurement like this. All right? It makes sense? So you see now, from, the monthly chart, weekly chart, what we are looking at, the key level, we are zooming into it because you want to enter the trader, you want to know what to do now, all right? Know that the general market sentiment toward the dollar yen is bullish. They want to buy the dollar yen. So when you are selling against the market trend, all right? But we can sell. If we receive a sell signal, we will not sell straight away. We will apply the trading drill, all right? That's it. We will also pay attention to economy news. Very simple, all right? Okay? So this is what's happening now, okay? I'm going to go now to the 2-hour chart, okay? And let's see the market pattern on the 2-hour chart. I'm going to remove this spot here. On the 2-hour chart, okay, you see that, our bigger channel is still in place on the 2-hour here. Here. It's the top of our consolidation. You went horizontal, now you went blah, 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 blah. It's here now, okay? But we can do more on I can continue to draw lines here on my 2-hour chart. I can draw a trend line like this. All right? Okay? We are coming to the end of this video soon, okay? But I want you to see everything, all right? I can draw another trend line like this. Because anytime you want to enter the trend, we can draw another trend line like this. But the bigger picture that I do not want you to forget is the consolidation. We are now on the median line, okay? You don't want to forget that. Right now, as I explained to traders at Fibonacci training at dayprotrader.com, some traders profit from it. They were selling because we see what? Did you see that pattern? That I said to traders that is not yet completed. Okay? The head and shoulder pattern is not yet completed. That's what I said to traders at that video. And I was telling them that traders that are following, I know some traders follow, they follow at dayprotraders.com, they follow at stochastic.com, they follow at 248 Your Wave. Some traders are following us at Google Plus. Sometimes I post some videos straight away at Google Plus because I like to edit my video before I post them on YouTube. But I can go directly as soon as I record a video and post it, boom, on Google Plus. All right. So you want to know where to find us. Sometimes we talk also on Twitter. Like this Friday, I was busy talking about euro dollar, what's happening, all right? But I'm a busy bee, all right? So I do it sometime. This head and shoulder pattern is not yet completed. Why? Because the neckline is not yet kaput. This is what I say to traders. But that time, the price was here. And I was saying to traders, in that case, so there's a head and shoulder being formed, but it's not yet completed. The price dipped below the neckline, but couldn't find a resistance, quickly return back above it. This is what we are talking about. The big market players want to buy the dollar yen, and it can be tricky to sell the dollar yen. Doesn't mean that we cannot sell. If you receive a sell signal, we can sell on the edge. 1, 2, 3. All right? All right? Okay, so this is how we can trade on the edge, okay, using a top-down trading method, okay, higher time frame, break it down, okay, to the lower time frame. From the 2-hour chart, we can go to the 3-minute chart or 5-minute chart, okay, and then see if you're on the edge, okay, you want to sell. Like I was telling trader last time, we see the head and shoulder pattern, all right, on the 3-minute chart, it becomes a sell, trader sold it. See what's happening here, okay? If it's going down, it will be in a declining channel. If it's not in a declining channel, you know it's not going down. Is it going up on a 3-minute chart? Yes, it's going up on a 3-minute chart right now. Now it's out of the channel on a 3-minute chart. Market pattern on every time frame. Ladies and gentlemen, this is the end of this video about FX trading, dollar yen, okay, US dollar, Japanese yen, okay. 2015. It's a long video. It's essential that we talk about everything because the idea behind this video is that trader can go back to this video throughout the year. Okay, so note this video down or put it in your playlist, your favorite playlist. YouTube allow you to do that. Create your personal playlist on YouTube. Okay, important. Okay, dollar yen playlist or euro okay, dollar playlist on your YouTube channel, and then you just click on add, okay, to playlist, and then you scroll it down to your euro dollar playlist or dollar yen playlist, and you put the video there. All right, you can do that. I watch videos a lot on YouTube, and I put them on different playlists, which are my personal playlist, personal, okay, private playlist, and okay, I can go back if I want to see, okay, the video again, okay, especially Shark Tank, Dragon Den, all right, House of Cards, those kind of videos. I like to watch them. So this is it, all right. So at the end of the day, I will to summarize this video. There are key levels that we do not want to forget throughout this year, 2015, for the dollar yen. We are comparing the economy of US to the economy of Japan. We want to pay attention to the high impact news in Japan that will affect the yen, and the high impact news that will affect the dollar, the US dollar, okay? We want to understand also that the general market sentiment towards the dollar yen is bullish because the Federal Reserve is preparing the market to accept a push up in the interest rates, okay? That remains to be seen. Okay, it's very important. Right now, the Japanese economy is about, the Bank of Japan is busy, okay, devaluing the yen, and the Federal Reserve has stopped devaluing, okay, the dollar, all right? We need to know that. So when we are selling the dollar yen, it's a kind of contra trend. For the euro, as I explained to you, the general market is to sell the euro. But I say to people that the recession in the euro will surprise big market players because the recession will be very mild. The euro will catch up with a lot, as it starts showing a lot of signs of recovery right now. If we look for the dollar yen, okay, we compare the dollar yen to the euro. There's a weakness showing on the daily chart until proven wrong. For the euro, we see, okay, that the price is not displaying a new lower low anymore. Okay, this is, okay, the euro. It's not displaying a new lower low on the daily chart anymore. All right, so we need to be gentle until, okay, the price break below this range again for the euro dollar currency pair. I hope you have learned something for the video also, okay, and we put it to use, okay, to make excellent trading decision. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about FS trading, US dollar, Japanese yen, 2015. Speak to you soon.